North America's economic alliance may be entering its most dangerous fracture point in decades, and the consequences could hit far harder than most Americans realize. Behind the tariff battles and political headlines, Canada and Europe now sit on several critical pressure points, tied directly to U.S. agriculture, financial markets, semiconductor production, artificial intelligence infrastructure, and even food security itself. Washington spent decades assuming its allies would always remain economically aligned. But that assumption is suddenly being tested in ways few expected. Welcome back to your ultimate pit stop, Piston Pundit. Today, we're uncovering the hidden vulnerabilities, financial leverage, and strategic dependencies, quietly reshaping the global balance of power. Canada's potash grip, America's farming crisis. One of America's most overlooked economic vulnerabilities revolves around a mineral most people barely think about: potash. Yet without it, modern agriculture struggles to function. Potash is a critical fertilizer component that helps maintain crop yields, stabilize food production, and support large-scale farming operations across North America. The problem is, America depends heavily on imports. More than 90% of U.S. demand comes from foreign supply, and Canada alone provides roughly 80% of that total. Saskatchewan's massive mining network, operated by firms like Nutrien and Mosaic, has become the backbone of continental fertilizer production. For American farmers already facing inflation, diesel costs, and expensive equipment repairs, even small disruptions could trigger major economic consequences. But fertilizer dependency may only represent the opening layer of a much broader economic vulnerability, now attracting attention across Europe. Germany quietly maps America's hidden weaknesses. What makes this situation more serious is that Europe is no longer merely watching America's vulnerabilities from the sidelines. Reports suggest German officials have quietly examined sectors where the United States remains deeply reliant on foreign industrial supply chains, and potash quickly emerged as a key concern. German company K+S operates major mining assets inside Saskatchewan, giving Berlin indirect access to one of the world's most critical agricultural resources. But the analysis reportedly extends far beyond fertilizer. Officials have examined pharmaceuticals, semiconductor equipment, industrial chemicals, AI infrastructure, and advanced manufacturing systems where America lacks immediate alternatives. For decades, Washington assumed allied economies would remain permanently aligned. Now, geopolitical tensions and tariff disputes are forcing Europe to reconsider that assumption entirely. And as Europe quietly studies America's supply chain exposure, Washington may already be searching for controversial alternatives elsewhere. Trump's Belarus gamble: farmers face new risks. One of the most controversial twists in this entire situation involves Belarus and its massive state-controlled potash industry. Reports indicate the Trump administration eased certain sanctions connected to Belaruskali after negotiations tied to political prisoner releases. That immediately raised geopolitical concerns because Belarus remains closely aligned with Russia strategically and economically. President Alexander Lukashenko later floated the idea of selling potash assets to the United States, potentially giving Washington an alternative supplier outside Canada. But critics argue this could replace a stable North American partnership with deeper dependence on politically volatile governments already facing Western scrutiny. Analysts also warn tariffs on Canadian potash would likely punish American farmers most, driving fertilizer costs, crop expenses, and eventually grocery prices even higher across the United States. But agriculture may not be America's only pressure point. An even larger source of leverage could involve the billions of dollars quietly flowing through U.S. financial markets. Canada's $733 billion leverage, Washington faces new pressure. While fertilizer dominates much of the discussion, another enormous pressure point involves investment capital flowing into the United States. Canadian pension funds and corporations currently hold roughly $733 billion across American infrastructure, transportation, manufacturing, logistics, commercial real estate, and technology sectors. That creates influence extending far beyond agriculture. Prime Minister Mark Carney has increasingly encouraged Canadian institutions to prioritize domestic projects involving LNG exports, battery manufacturing, AI hubs, Arctic shipping routes, and critical mineral development. Even a modest reallocation of investment away from U.S. markets could redirect tens of billions back into Canada's economy. For Washington, that raises serious concerns involving borrowing costs, infrastructure financing, industrial expansion, and long-term investor confidence. Before we go further, do us a quick favor and smash that like and subscribe button. It helps Piston Pundit reach more enthusiasts following the future of automotive manufacturing, global trade, and industrial technology. And surprisingly, Canada's financial leverage may look relatively small compared to the massive economic influence Europe still holds inside American markets. Europe's $10.4 trillion weapon. Wall Street faces pressure. Europe may possess one of the largest hidden pressure tools inside the modern global economy. European pension systems, sovereign funds, and institutional investors collectively hold roughly $10.4 trillion in American equities, alongside massive positions in U.S. debt markets and corporate financing. For decades, those investments reflected confidence in American economic stability. But worsening geopolitical tensions are beginning to change the conversation. Analysts at Deutsche Bank and several European officials have reportedly explored scenarios where long-term U.S. exposure could eventually be reassessed. Even gradual shifts in foreign capital flows could increase market volatility, pressure borrowing costs, and weaken investor confidence across manufacturing, banking, industrial production, and technology sectors heavily tied to global financing networks. Yet the most underestimated vulnerability may not involve fertilizer or finance at all, but the advanced technology powering America's future industries. Europe's chip power, America's AI vulnerability exposed. Despite America's dominance in software, artificial intelligence, and cloud computing, the physical hardware supporting those industries still depends heavily on allied suppliers overseas. Dutch giant ASML builds the advanced lithography systems essential for producing cutting-edge semiconductor chips, while German firms like Zeiss and Trumpf manufacture critical optics and industrial laser technologies tied directly to chip fabrication. Without these systems, advanced AI processors simply cannot scale efficiently. Europe also supplies industrial automation systems, transformers, engineering equipment, and pharmaceutical ingredients deeply connected to American healthcare and manufacturing. Even insulin production relies heavily on European supply chains. The reality becoming impossible to ignore is that globalization created mutual dependence, and governments are now quietly identifying which vulnerabilities could become future leverage points. And once all these dependencies are viewed together, the broader geopolitical picture becomes impossible to ignore. Verdict: the era of economic pressure has arrived. For decades, the United States assumed economic size alone guaranteed long-term leverage over allies and trading partners. But today's global economy tells a very different story. Canada dominates fertilizer resources critical to American agriculture. Europe controls advanced industrial technologies tied to semiconductors and AI infrastructure, and trillions in foreign investment remain deeply connected to U.S. financial markets. These vulnerabilities were not created overnight. They emerged slowly through decades of globalization and deeply interconnected supply chains. Now, governments are openly studying those dependencies as geopolitical tensions rise. The biggest question is no longer whether allies possess leverage over Washington. The real question is how aggressively those economic tools could eventually be used during future global conflicts. And now we want to hear from you. Do you think America underestimated how dependent it became on allied supply chains? Could Canada and Europe realistically use economic leverage during future trade conflicts? And which industry faces the biggest long-term risk? Agriculture, automotive manufacturing, semiconductors, or artificial intelligence? Drop your thoughts and experiences in the comments section below. If you enjoyed this breakdown, subscribe to Piston Pundit and turn on notifications so you never miss the next vehicle update, industry shift, or geopolitical story reshaping the automotive world. Thanks for watching. You can now check out any of the videos on the screen. There's plenty more to explore.